Oh man, for Bitcoin up 2.6%, wicking above 20k before now just calling off slightly. But is this the reversal we were waiting for? Is Bitcoin ready to reverse now into the green? Short answer is no, but you're going to want to watch this video because a lot of people are going to get caught out and wrecked by this exact move. So stay tuned, do hit up the like button. Don't forget to subscribe. As always, if you want to buy any crypto, if you want to trade any of these moves, you can do so using BYBIT and BitGet, links in the description with some amazing bonuses for you guys to get set up. Now, we're sitting here, we're looking at these green candles on the chart, and we're thinking, hang on a second, is this going to reverse? And the FOMO starts kicking in. Should I start entering my positions? Will I ever see Bitcoin below 20,000 again? Are we going to get back to 30k? I'm going to show you the key levels I'm seeing on the chart because this is the exact psychology we need to manage in these times, right? It takes a couple of green candles before everybody starts getting greedy again and you forget what the pain was like to the downside. Now, what are we seeing here first and foremost? Let's bring out the hourly ribbon on the EMA, and you've seen what's happened over the last couple of hours is you have indeed got a powerful flip of your hourly EMA ribbon, which is really positive, right, for the short term here on the hourly. We switch on over to the 4 hourly, you can see not quite. You can see we're getting a rejection at the top of the EMA ribbon. And this is going to be an important point to notice. How long is this going to go up for? Is it going to be short-lived, i.e. a couple of hours? Is it going to be longer term, i.e. 4, 8, 12, 16 hours, or could it be a number of days? That's what we need to identify to figure out where this price move could take us, because we want to make sure we're prepared for where this price move could take us. So what you can see is we're getting rejected here by the top of the EMA ribbon. It did wick indeed up to 20,000. And if it could get to 20,000 and hold above it for the 4 hourly candle, then that would have been really bullish. But you can see here, the bears haven't allowed that. And now you've got a fresh candle opening up literally as we speak now. And the next 4 hours, either we're going to get a green candle and close above the EMA ribbon, which would be bullish on the 4 hourly chart, or we're going to get rejected back down again, okay? And this was just the calling off, which I was talking about for a little while. Let's also head on over into this chart because I do want to show you what we're seeing here. This is the 4 hourly chart. And as I was showing you guys, we were in this bearish continuation pattern. This is a symmetrical triangle, which is a continuation pattern. You continue most likely 2/3 of the time in the pattern in which you entered the trade in. So as you can see, we enter this symmetrical triangle in a bearish trend, and we expect a bearish trend to continue more likely than not. Now, that doesn't mean you can't reverse, and I'm going to explain what you need to do to reverse and what that would look like. But all we're seeing right now, and the candlesticks we're seeing, is we're just seeing this action here. You saw that candle where we got rejected. That is just there. And there's nothing wrong with getting a pump for Bitcoin all the way up even to here, right? This is part of the motion. But in order for us to get excited for a long-term move, we not only do we need to break out from here, but we need to get the retest and do something like this. At that point, we can say, okay, we're going to get a reversal on the 4 hourly chart, which we're looking at. But how far could that reversal take us? Let's take a look. So what we'll need to play out here for this reversal to play out, let's get a, oh, that's not a fresh chart either. Let's use this chart then for now. And what I want to show you is this. Let's take a trend line. And what we could be creating is if we draw a neckline around here, let's just draw a very rough neckline. That's not even straight. Let's draw this neckline here. Okay. And let's then turn to the daily chart because I want to show you the important pattern we could be forming. What we could be forming is a W pattern using that neckline I've just drawn. Rejected. And if we bounce, if we can clear the triangle, look at that. We then create our W pattern, or in other words, another variation of a double bottom pattern, which could break to the upside, which would be really nice. So that's what we would want to look for here as a bullish scenario to break us to the upside. Now, if that was to happen, what kind of a price point could we see? Well, the measured move would take you all the way from here to the bottom of this wick. So very roughly speaking, let's take that and put that at the point of the breakout of the neckline. And this could take you up to 27. Now, I'm going to explain why the 27 level could be quite important. So let's just clear that up slightly. Let's remove that neckline. Let's bring out the EMA ribbon. And what you can see here is on this pattern, we are still extremely bearish. We're still very extended from our daily EMA ribbon. So we are still extremely extended from our daily EMA ribbon. So a run up from this W pattern, this hypothetical W pattern, could in essence take us to 27. Now that would mean we could flip our daily EMA ribbon bullish, which could then set us up for a more extended move. But again, the most likely scenario, even if we do get this breakout of trend from the triangle or the W pattern, is we're going to run into this resistance. There's a lot of sell pressure here. The bears have a lot of pressure. You guys can watch my video from earlier today explaining the on-chain metrics of why there will continue to be some sell side pressure. So we have to respect the trend, and the trend is to the downside. So all we're doing right now, let's just remind ourselves of what we're doing. Everybody right now who's watching this video, who's looked at the headlines and said, oh, look, we're green, they're excited about this bit here. But if I zoom out, leave that arrow in there, that's a small move on the 4-hourly chart, which if I go to the daily chart, is just taking us to the top of the triangle. So nothing to get excited by until we break this trend or until we create the double bottom pattern. Even then, if we break that pattern to the upside, don't forget, even if we head to 25, even 26, will not quite be enough for us to flip ourselves bullish. This could still get rejected by our EMA ribbon. When things start to look much more positive on the daily time frame is if we get a close above 26,000. That could be really good. And then we can say, okay, we flipped our EMA ribbon. Maybe now we can set ourselves up for a nice run towards 30, 35, and then work our way backwards. But there's no sign of that happening just yet. Fear and greed index continues to be quite high, 14 on the fear and greed index. A lot of people are still fearful, but not as fearful as they were when we were down to these levels before. So you're starting to see people trying to buy the dip and get back into the market. Also, another worthy piece of information to share with you guys was this. This was quite a interesting piece to read. Singapore's central bank weighs further safeguards on retail crypto trading. The Monetary Authority of Singapore, MAS, may introduce rules on the use of leverage in crypto transactions. And again, guys, this is all the spill out and the fallout from all the various CeFi lenders struggling, and 3 Arrows Capital, UST with Terra Luna. This is what you're seeing happening. And the reality is, all these regulations are going to affect you and I. Right? They're going to affect you and I because their job is to protect the average consumer. They're not here to protect hedge fund owners, right? They're here to protect the average consumer. So they're going to limit what you can do, which is a bummer for those who do it responsibly. But ultimately, when you have a few figureheads that are doing it irresponsibly, and we can point to all the companies that we've been talking about over the last few weeks, from UST and Do Kwon to Celsius to BlockFi to Voyager, we can keep talking about it, 3 Arrows Capital. But those few actions will affect how we trade as the rest of retail investors, right? Because these safeguards are there for us, and therefore it limits how we can trade crypto. Apart from that, if you head on over to CoinDesk, all you're going to see is negativity upon negativity, right? 3 Arrows Capital, Paper Trail leads to trading desk. Voyager Digital temporarily suspends all trading. Then you look here and you see crypto's credibility problem, right? We're just getting hammered, and you can definitely feel we're in a deep bear market as we were expecting. Guys, hope you enjoyed this video. Hopefully it gives you a bit of perspective on some of the green we are saying. I'm not saying we can't see a rally. We can indeed see a rally, but don't get too excited until we get that daily close above our daily EMA ribbon, a close above 26 and 27, and then we can start saying, okay, we've stopped the bleed. Maybe we can try go sideways now, if not continue our upwards momentum. But right now, you've got to respect and give homage to the fact we're in a deep downward trend. The bears are in control, and we're getting battered here to the downside. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. Do check out BYBIT and BitGet, links in the description. Get yourself set up on those exchanges and enjoy the bonuses they've been kind enough to offer in the description. Go watch this video, and I'll see you in the next one.